Moment, let's welcome someone who's ruminated over all the weekend news and will look at stocks more fundamentally. Ajay Bodke of Prabhudas Lilladher is with us. Morning, Ajay. As always, good to have you with us. Are you telling your clients to buy at current levels? We've seen a decent 11-12% rally.
Good morning, Lata. Yes, I think we are advocating that investors should take fresh long positions. I'm expecting the markets in the short to medium term to trend upwards to around 78,000-3,900 levels, primarily on the back of two issues. One is we are expecting the RBI sooner rather than later to cut interest rates. The government clearly has played its part. In the budget, it has stuck to the medium-term fiscal consolidation plan. Despite challenging circumstances, inflation is trending down, more or less between 5-5.5% trajectory. We have seen the gross and net borrowing program of the government lower than market expectations, and the government over the weekend cut small savings rate, another signal to the RBI that we have done our part. And the US Fed policy clearly indicates that the medium-term trajectory of rate increases in the US clearly is very, very modest. Only one rate increase will happen over the remainder of 2016. So I think in our view, the RBI should cut interest rates at least by 25 basis points, if not 50 basis points in its meeting on 5th of April, if not earlier. And that should give a leg up to the rally. And the first half of the session has been very productive with a couple of important bills being passed. And we're expecting bankruptcy law and the amendments to MMDR to go through. If not, I think the GST. So both these reasons, I believe, will give a leg up to the market. And interest rate sensitives should rally from here on. One should be long on the markets.
Okay, so in the near term, continue our conversation with Ajay Bodke of Prabhudas Lilladher. Ajay, you were indicating that the long momentum is still very much intact, and you would recommend a buy, especially on rate sensitives, as you are expecting the RBI to cut rates. So say from a 3 or 6 month time horizon, what would be the Nifty target that you've set out, and any individual stocks that you would recommend a buy on in the interest sensitives pack? Yeah,
I think as I mentioned, the first levels I'm looking at is around 78,000-79,000 levels in the short term. And I think, once those levels are reached, as I said, what happens in the second half of the session also is crucial. If these three bills, bankruptcy, MMRDA amendment and GST were to go through, then obviously we are looking at a very higher trajectory for the market. But we'll come to that when the first level is reached. On the rate sensitive side, I think banking and finance, in my opinion, should lead the rally. And there I would weigh in favor of slightly higher beta names. Names like Axis Bank and Yes Bank, in my opinion, I think should lead the rally. In case of autos, I think we will be weighing in favor of the largest names, Maruti Suzuki in the passenger vehicle side, and the commercial vehicle, especially the MCV, HCV pack, continues to trot out very good numbers. So there, I think, both Leyland as well as Tata Motors, I think one can look at with a medium-term perspective. On the ancillary side, I think one has seen a slew of bad news over the last 1.5 years in Bharat Forge with, the slowdown in the exploration bit on the shale side. But that has, in my opinion, already got discounted in the price. And after consolidating, for last quarter or two, I think the stock, if one takes a 1 year perspective, can be accumulated. However, I think the numbers in the near term might continue to disappoint. But with a medium-term perspective, the company's strong position makes us believe that they will effect a strong comeback. On the FMCG side, I think we are positive on some of the names like GlaxoSmithKline Consumers, which had not such a good quarter because of floods in Tamil Nadu, which contributes a large chunk of their top line. But that's a one-off event. And this quarter, I think the volume growth also will be far better than what it was last quarter. The company has good pricing power, and so GlaxoSmithKline Consumers is what we're advocating investors to look at, along with Britannia, which continues its upward march insofar as improvement in margin expansion is concerned, wide distribution network that they are increasing, and they're still at a steep discount insofar as number of outlets is concerned to the leader parlay. So they have a large scope to expand distribution network in the two areas of north and east, where their presence is very weak and which are strong growth areas. In pharmaceuticals, we have seen the last couple of weeks being not so good because of 344 FTCs coming under the government banning 344 FTCs and an overhang of a further 600 to 700 FTCs coming under scanner. But there are names in the pharma pack that do not suffer from this ban. Names like Aurobindo Pharma and Jubilant Life Sciences. Unfortunately, what has happened is everyone has got painted with the same brush, and even these stocks have come under pressure. So this is an opportunity, in our view, to look at both these names, Jubilant Life Sciences as well as Aurobindo Pharma. And Sun Pharmaceuticals in the large cap is something we are advocating. The company is continues to get a lot of approvals. In its conference call last quarter, the company has said that whatever remedial measures they had to take, they have taken for the Halol plant, and the ball is now in the US FDA's court, and they're expecting that in the first quarter of next financial year, US FDA team should come and inspect the remedial measures that they have taken. In case they get an all clear, then I think the stock is set for a very strong rally from the current levels. So that is one stock I would advocate investors to look at with a medium-term perspective.
All right, that's a breathless list of stocks you've given us, Ajay. Thank you very much for speaking with us and analyzing the stocks that your team is recommending to investors.